Hello, welcome to the European Open Briefing for Friday, October 20th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. The US dollar suffered some losses yesterday. It's up sharply though this morning. It recovered strongly late last night after the US Senate approved the budget blueprint, which paves the way for Trump's tax reforms. The euro made a surprise recovery yesterday. Actually, it's seen 2 days of strong gains. It's back down a little bit this morning, and this comes despite the fact that we are seeing increasing tensions in Spain between the central government and the Catalan regional government. The pound is also struggling despite the fact that at the EU summit we saw some signs that the Brexit negotiations would be moving to the trade round by December, and the New Zealand dollar continues to fall sharply after the announcement yesterday that the New Zealand First Party has selected Labour to form the next government. Labour, of course, there is uncertainty about their economic policies, so that is heavily weighing on the Kiwi. Let's start though with the US dollar. We can see it's doing rather well against the yen. It's at a near 2-week high of 113.31. The dollar index hasn't really managed to reached the peaks of early in the week, though it still sets to end the week up around 0.5%. Yesterday we had a vote late last night in the Senate where they approved the budget blueprint, which would potentially make it easier to pass a tax reform legislation without needing the support of the Democrats. Although there's still some way to go, they still need to discuss what exactly they will be approving from those initial proposals made by the White House, and the timing of it as well as the fact that the House of Representatives have their own version of the budget, so they would need to be reconciled with the Senate's version. So still a lot of work to be done, but this was definitely a positive step towards having those tax reforms being eventually passed in Congress. So that's obviously been positive for the dollar. Yes, they did come under pressure. There were some reports that President Trump is now leaning towards Fed Governor Jerome Powell to be the next chair of the Federal Reserve. And the reason why that's negative on the dollar is because Jerome Powell is actually one of the more dovish candidates. He's known to be even more dovish than Janet Yellen. So if President Trump does indeed select Powell to be the next head of the Fed, that could potentially lead to some weakness in the US dollar. We did see some strong data yesterday, though. Jobless claims dropped to 44.5-year low for the week ending October the 14th. This suggests that the labor market in the US bounced back strongly after that negative impact from the hurricanes in September. Let's have a look at now Japan, because another factor that's boosting dollar yen now is the Japanese elections on Sunday. The latest polls suggest that the incumbent Prime Minister Shinzo Abe's Liberal Democratic Party are on track to win a majority. That's negative for the yen because it would mean ongoing loose fiscal and monetary policies in Japan. It's going to be interesting to see whether or not he manages to win a two-thirds majority. Two-thirds majority would make it easier for Abe to make some critical economic and constitutional reforms. It would also make it easier for him to reappoint Haruhiko Kuroda, he's the Bank of Japan governor. His term expires in April, and if Kuroda is appointed, that would also be negative for the yen, given the fact that it was Kuroda who initiated that massive stimulus program a few years back, which led to sharp falls of the yen against the US dollar. So the election outcome, although markets have pretty much priced in a win for Abiy at the moment, we could see still some impact on the yen, depending on whether or not Abiy wins a 2/3 majority or not. Let's move on to the euro now, because the euro did manage to make a decent recovery in the past 2 days. It is down this morning though, both against the dollar and the pound. Yesterday it hit a near 1-week high, $1.1858, and also managed to break above the 0.90 level against the pound. In terms of what's happening in Spain, it wasn't really too positive. It was actually quite the opposite. We saw the Catalan government missing the deadline set by the Spanish government to clarify its stance. The Catalan leader has said that he maintains that the declaration of independence is suspended, and has refused to renounce those intentions. The Spanish government is now planning to debate in Parliament on Saturday to invoke Article 155, which would basically suspend autonomy in the region. On the other hand, the Catalan leader says that he wants to hold talks with the Spanish government. If the Spanish government refuses to hold talks, then they would go ahead next week to and go ahead and declare independence, and also especially if the Article 155 is suspended, that would definitely lead to the declaration of independence being approved by the Catalan Parliament next week. Looking now at the pound, because the pound seems to be struggling despite the fact that we had fairly positive developments in terms of the Brexit negotiations front at the EU summit yesterday. The German Chancellor Angela Merkel suggested that the talks could potentially reach a breakthrough by December, and therefore the talks would then progress to the next round, which would be discussing the trade negotiations post-Brexit between the UK and the EU. Perhaps one of the reasons why that didn't see much of a reaction in the market is the fact that the main concern for investors at the moment is how quickly the UK and for how long the UK will be able to secure a transitional arrangement, because that's very important for businesses. Businesses want that to be sorted out as soon as possible, because it would provide some certainty. The pound hit a 1.5-week low of 1.3085 against the dollar. They didn't seem too impressed with what happened at the EU summit, and also there is uncertainty about the Bank of England policy. At the August meeting, the Bank of England strongly signaled that they would be raising rates in November, and we also had some subsequent remarks after that confirming that. But then more recently, Bank of England policymakers appear to have become a bit more cautious. We saw those comments by Governor Mark Carney and others at the Treasury Select Committee hearing on Tuesday, where they seemed less certain about raising rates. And yesterday we had more comments by Deputy Governor John Cunliffe, who said that we are not seeing sustained signs of domestic inflation, suggesting that the current spike in inflation is temporary, as it's mostly being driven by the drop in the pound. So all of that has led to a bit of uncertainty as to, even if in November we do see a rate hike by the bank, it could mean that they are unlikely to go up further beyond that. So that's obviously dragging on the pound at the moment. And finally, quick look at the Kiwi, because we are seeing continued drops in the New Zealand dollar against the US dollar. It has now reached to 5 months low, 0.6969. It's down over 2.5% in the past 2 days. The reason why the markets aren't pleased about Labour forming the next government is because they want to undo the tax cuts that were announced by the previous national government. Also, it's quite possible we might see reforms to the Reserve Bank of New Zealand, potentially leading to looser monetary policy over the longer term by the central bank there. So all of that is worrying investors also, as well as the fact that we could potentially see a much weaker Kiwi in the longer run. Looking at today's economic calendar, we don't have too much major data out of Europe this morning. The main focus will be Canadian inflation and retail sales numbers later in the day, as well as US existing home sales. We're also going to hear from Fed Chair Janet Yellen when she speaks at 23:30 GMT on monetary policy since the financial crisis. That's it from me. Thank you very much for watching and have a great day.